Good evening. This is the Elliott Wave daily update for the S&P 500 and the NASDAQ 100 for Monday, November the 4th, 2024. Well, here we are, election eve. And the markets really did some crazy things today with the moves. And again, I'm just going to say, I believe it was all tied to levels within the options flows, capital flows, and volatility. Now, volatility has remained high, and a lot of it's being wrapped around the election, the elections keeping vol high. I think, sort of. It definitely is making sense. But I think the real purpose or the higher vols reasons lies with the Fed on Thursday. And we have a vol expiration on Wednesday morning. So here we have the election tomorrow. So again, the options that expire on Wednesday, yes, I can see them coming into play via the election, but they come off on Wednesday morning. So as to what severity. But while I'm talking about vol, I just want to go quickly. I just want to show you. Here we have volatility, the VIX. This is what they buy and sell. These are where the options are. And nothing really on the 6th or the 13th, but let's take a look at the 20th. And let me just bring this up a little bit so that we can see. Here we have the November 20th, 19 call, 230. The 20 call, 307,000. The 21 call, 113, 109, 107, 205,000 in the 25 call, 113,000 in the 29 and the 30 call. We come over and we take a look at the puts, which, by the way, saw 100,000 of these 17 puts, 100,000 of that traded today. So coming in, the open interest is 195,990. 100,000 traded today at 85 cents. Telling me it was done in a spread, I just don't know what the other side was, because I don't see another 100,000 contract trade being shown. So I don't know what the spread was, but it's being labeled as being in a spread. Now, this is where vol is trading. So if I look at vol that's going off this Wednesday and next, and then the 13th, I'm not seeing much movement. I'm not seeing many options trading. But here we saw the VIX, this index, right? The volatility index, the cash index, remain higher, fluctuating up and down, but remaining in the green, in plus. Whereas the future, the VX, was actually down on the day. Now, at first I was taking that, wow, what is that? Is that they're doing the risk on trade? But let's go over some other levels today. We saw coming in today the put wall in the ES was at 5730, which equates to 5700 in the SPX. Got broken early, and then not by very much. In fact, the low today was 57. Let me see what that was. Get back on it. 50. Come on. Give it there. 57.24. So really 6 points. So, yep, some people say, well, yeah, but it broke. It's like, yeah, it did. And we got a little bit of a reaction. But that selling actually started at about 11 Eastern in the market. And it started off of the 57.68 high and then just went kabam, broke it, went down a little bit more, and then just rallied. And when they turned it, it was amazing. It was amazing because they just came in to the stocks. They came into the stocks. They came into the stocks. And just everything kind of got lifted. Now, Elliott wise, you're kind of looking at this going like, what are they doing? So while I do believe a large part of this is a product of volatility, so whoever sold that 100,000 options, that's money. They receive that premium. They receive the money. And then that, to me, kind of starts to reflect on, wow, what are they doing? Did they match that off with something in the future? I don't know. Did they take it and start buying back into all of these components within the S&P? Also the Mag 7? Also. So we saw a lot within the Mag 7 remaining higher and running higher. Because if you're going to go, sell 100,000 puts, you got to start selling the index. That's your hedge, or selling something. And the person who bought all those puts, they got to buy something. So in any case, this whole thing, I think, is not necessarily tied to the election tomorrow. I think a piece of it is. I think more of it is going to be tied to what happens on interest rates on Thursday, if anything. I think it's also partially tied to how are they going to take out vol expiration on Wednesday morning. So we may see vol, continue to really kind of flip and fly tomorrow with the market responding in like. So in other words, it's like when we see vol rise, we're going to see the markets being hit. When we see vol drop, we're going to see the markets being bought. Now, what on an Elliott basis do I think? Well, you'll notice that I've not really changed the labeling. But here, I'm leaving this in. It was broken on Friday. And then on, in Globex, came back and held this level and went up a little bit above it, right? What was the high? 76. What this was, 74. Okay. But it held 1, 2, 3, 4, basically 5 times, 6 times. And continued to work its way lower. Now, what do I think we could be going? I think we're still inside this fifth wave down, within this minuet wave C to complete the minute wave 4. So these are sub-minuet wave patterns coming off here. And if I think if this is going to be the 4, and this pretty much looks like a 3 now, doesn't it? ABC 1, ABC 2, ABC 3. Crazy as that thing looks. ABC, maybe we come back up a little bit, maybe even all the way up here. So it's weird. I know it is, but I'm not sure what else you're going to call all this mess. So I'm going to continue to look for this to be completing a minute 4th wave. Where are you sitting? There you are. I'm completing this minute 4th wave. And actually, this should come over, right? Let me do that so that we're keeping it in line where we think the market is going to produce this. So these, and I do believe, unlikely tomorrow, probably, maybe tomorrow after our close. I don't know, maybe tomorrow evening during Globex. But I do think we come back down and once again break that put wall, which, by the way, which is not something I normally do within these updates, but it remains at 5730 in the ES, 5700 in the SPX. So even though it got broken, the positions that were there stayed. Whoever has those large positions went, no way. And they bought. They bought it back up, taking the pressure off to have to continually sell into that weakness. Now, the S&P made its low and then rallied, came back down. So it's staying within now this range. How was it trading today? It was easy, and then it got difficult, then it got sloppy, then it got easy, etc. So it wasn't as easy as maybe people thought, or as smooth. Let me say that's a better word, smooth. So there were moments that you got up, and then all of a sudden you got whack, 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 and then you were down, etc. So that is a product of the volatility and just the way the market was moving in terms of the internals within. And what I mean by the internals is the component stocks. So I'm leaving it as is, looking for still. Now, don't get me wrong, because it's possible to say, because that did put in a new low below what we had, which was right there at 57.30, and came down, put in a new low below that. So effectively, but the deal is, can I count 5 down to this level? I really can't. And I'm trying to do many different ways. You could come in and you can look and think, oh, let me put it on a line chart and see what it looks like. Does not look like. It looks like an ABC down. So it could take a lot longer. So that in mind, I'm leaving it all open, but I am going to consistently look for a different one. And I think, 50, this is 56.97 and 95, but I think we need to really include down towards 56.75 for it to come into. We might have a little bit more on this downside, and I don't want to go on this level. I don't think that. Let's try putting in a 1.882 and see what that looks like here, because it could be coming up a little higher. Yeah, 56.80. So I'm going to leave that up there because that's more. I think it breaks, and they do get that push that we would get by going through a put wall. And I think it could come down here, but once again, won't be. I want to use the word tolerated, but it won't be accepted, and the market will reverse again. Again, longer term, we still have plenty of companies that are due to report. This is a heavy week for the S&P. There's 100 within the S&P that are reporting this week. Not super heavy in the NASDAQ, but we do have some in the NASDAQ which could move us around a little bit. We don't have NVIDIA until the 20th of November. So that takes us all the way out to the same day that we get a big vol expiration. It gets interesting here at year end. So I'm leaving this as is. Not sure how I'm going to label it, but it's got to be one way or another. I got to be able to count 5. So if anything, I got 1, 2, 3, and we got to do a little 4. We're going to come back down in 5, end up somewhere down in here, and finish that off. Now, moving averages, and I'm going to flip out to the daily because those are the ones that I really watch for this. Still below, but played. You can see what it did. Played both sides, down and up, and then where's it close? Right below that daily 50 period moving average. 200 basically still has a slight upward bias. The 20 has decided, well, I'm going to slow down this train a little bit, right? And so did not go down with the same intensity as we maybe thought it should have. I think that's because of the intraday in play. Even though the daily candle is, let me just see if I look at it as a candle. It's a positive close. So we can look for maybe a little positive opening and then boom. Or they'd all do it all overnight. We also got that as well. So let's go over and take a look at the NASDAQ. No need to spend a lot of time on this. So NASDAQ, a little bit different. I'm going to start down on that on the hourly chart. And here again, we did not break to a new low this morning. We got down to 20,013. This is 20,850. So I'm sitting here thinking, okay, could this have been, when I saw this, could this be a small failure? And we are done. And then I thought, nah, I put it out here in the hourly. I thought, no, it's not clean. It's not clean. So again, I feel that I need to I'm going to put these back on to see about where we are. So, and that is putting on this to there. And here again, 20,044, I'm going to remove. So I'm just going to reset that, get rid of the 618, get rid of the 1, and bring in these. And again, those are on the sub-minuet level. And we'll say okay, and look. So these are still alive, both. And I'm actually more in favor of the 19,894 than 19,814. This would be if we just have a complete blowout, and I actually think if it got down there, I'm going to be looking for something different. But it depends on how the market is. But you can see very, very sloppy. And there we have that one. And what actually, both in the S&P and in the NASDAQ, what happened there was just a total reversal from this rally up, saw intense call buy. Buy, call, buy, call, buy, buy. And then it just fell apart. And they ended up selling calls and puts all the way back down. And then they had to not cover, but they had to hedge. And then it just came all back. But the selling continued much for the balance of the day. The call selling. Now, I'm seeing what the result of that is that we're seeing the call wall shift higher in the SPX, in the ES, and I think also in the spiders it flipped. Yeah, it flipped a little bit higher. When we're looking at the NASDAQ, it's still the same, but it's much higher. Call wall in the NQ is up at 20,465, and that equates to 20,300 in the NDX. So again, this activity that I've been seeing is really coming in within the ETFs, so the Qs and the spiders. That's where I'm seeing some real volatility and some volatility moves. So I talked about it over the weekend, and I was looking at the Qs. I want to just go back and look at them. You can see here we come down, didn't break. And I think today that the volatility trigger or the put wall the put wall remains the same. Put wall didn't move. But we had a couple of larger levels that kind of got triggered a little bit. But boy, when they came in to just start buying, and then they just bought up to there, took it all the way up to there, and then they started to bring it down because they see 490 was the volatility trigger. And if they broke that, it definitively would have turned the market, and everybody would have been like jamming to go for that risk on, putting risk on back on, which is kind of crazy in front of the vol expiration on Wednesday, in front of the Fed on Thursday. But the Fed on Thursday, I don't think people are really looking like they're going to do anything seriously stupid. Like take back they drop the rates, that they're going to take part of it back. I don't think that's going to happen. If anything, we might see an additional cut, not large, 20, 25 basis points maybe. So I don't think we're going to get another 50. But what's going to be more important is of course, Powell's conference. And that's on Thursday. So we still got to get through all the rest of this, i.e. the election. So how much of this is all election bound? Some of it may be, because I'm seeing that they're moving levels. So in other words, it's like they're moving the levels where there's large gamma being collected. And I knew some of that was going to change because of Friday's expiration. I think some of that again changes today because they're just shifting it around in advance of the election. And then again, the vol expiration and then the Fed. Now it may prove to think that call walls and put walls are kind of positioned around the market right now, particularly in the Qs. We got 510 on the upside, 510 call wall. So that's like going all the way back. And trust me, I think it's like if they really start to rally that thing, I think they'll get out of those calls. They'll be, they'll do some changing. And again, 465 is the put wall. And right now, pretty safe. Pretty safe. So back to the old NQ. I am thinking that we got the same type of deal where it's not pretty, it's not looking real good. But if this is the 4, this is 1. Oh God, it's just so difficult. It could be 1, 2, and then it's got to be the 3 down, the 4 up, and the 5 down. It's just, again, or we're still inside this 4, which I don't think we are, and it's just going to be one big old flat. Like I'm putting a 4 here, and maybe this is the A and this is a B. Didn't take out that low. And now we got this crazy looking, but we get a C wave taking us back to 20,000. Then we put the 4 over here and we come dropping down. Also a possibility. So really what it comes down to, if you are a swing trader, difficult, very difficult. If you are a position trader and you're happy with how you're positioned right now, good. Because I think messing with it could really mess with why are you long? And because most of the time people are getting long for a specific reason. Is it because in advance of the Fed, you want to just hold some long positions? Whatever that may be. Day trading, it was easy and then it wasn't easy. It was easy and then it wasn't easy. So it was a matter of like doing what you could and staying out when they were being a little bit confusing. Because we had a lot of two-way action in the market within the stocks. We had NVIDIA. NVIDIA was pretty strong until the very last hour. Then they started to kind of let it go, get out of positions, whatever. But it was up over $3 at some points. Would rally, drop back down, pull back, rally back, pull back, rally back, and then at the end of the day, I guess it just saw it get hit a little bit more. The Russell, on the other hand, ends up down on the day. But after it had a really magnificent day in terms of straight up. So we're seeing that rotation still going on in the Russell. Now, I'm not going to go into great detail. I still think that, and I think here's where the level, 19,894, I think that's going to be a very important level. It comes up in several different views. And then any follow through of any intensity, I think could be caught here. And that would then put that C wave in, and the wave 4. And then we rally in that wave 5. And as far as the election goes, folks, again, I think the volatility is more lined up for, number one, the expiration on Wednesday, but more so for the Fed on Thursday. All right. Now, tomorrow, let's just take a quick look at what we have in terms of economic numbers. U.S. trade deficit, and at 8:30 a.m., 9:45, S&P final U.S. Services PMI, and at 10 a.m., ISM. Both of those, particularly ISM, could give us a little rock in the market. So that's at 10 a.m. Next update will be on Tuesday, November the 5th. Get out and vote, folks.